Hi, everyone. This is Sarah Brodsky with the Brodsky Team Real Estate. And today I am super excited because we're going to talk about 1031 exchanges. A lot of people ask me about how to exchange one property that they own and rent for another property. We have a lot of clients that go through the 1031 exchange. They sell one rental property and then they purchase one or two different ones. But a lot of people come to me and they say, well, I do want to use the 1031 exchange, but I do not want to be a landlord again. How do I avoid doing that, but still utilizing all the benefits of the exchange program? So today we have Ken, who's going to tell us a little bit about Delaware Statutory Trust. Mouthful. So, especially for not a native speaker. So, hi, Ken. How are you? Thanks for joining us today.
Doing great, Vera. Thank you so much for having me on today. Appreciate it.
Wonderful. Well, to start, just tell us a little bit about what that is, the Delaware Trust.
Yeah, so Delaware Statutory Trusts have been around, for over 20 years now, and it's just not very well known. But basically, they're a special purpose entity that was specifically created to allow investors to co-invest in a property, and to allow that to qualify for a 1031 exchange.
Okay. And how does that work? So let's say someone has $1 million that they just netted from a sale of a property and they do not want to be a landlord. How do they invest with you in that Delaware Trust?
Yeah, so it's a great question. So the Delaware Statutory Trusts are actually sold through financial advisors, and because they're technically a security, so they'd want to talk to obviously their tax professionals and make sure that the exchange was appropriate for them, and then decide whether they wanted to do a DST or not. If they decided to do a DST, the nice thing is that each DST is basically a turnkey solution for their 1031 exchange replacement property. So the DST actually already owns, operates the property that they'd be purchasing, and they could create a portfolio of DSTs to get them diversification and all of those things that they're looking for with the monthly income and potential for appreciation, all while being able to sit back, relax, and know that a third party institutional manager is managing the property and the asset management for them so that they don't have to do anything.
Okay. And then I know I brought up $1 million, but a
Yeah.
lot of us don't have $1 million to invest. So is there a minimum that you can invest with you?
Yeah. So the minimum is actually only $100,000 for most DSTs for a 1031 exchange.
Okay, perfect.
Yeah.
And then I know a lot of people want to know how liquid the money is. So if you invest, what
Yeah.
are the options of getting the money back? How quickly can people do that? How long do they have to invest with you?
Yeah. So because it's technically they're owning the piece of real estate, until that property sells, there is no mechanism for like a secondary transaction or market to occur. So from that respect, it's not a very liquid investment. You're going to be in that investment for 7 to 10 years or until the property sells. And that's when you'd have the opportunity to do another 1031 exchange. And at that point, you could buy another piece of real estate, buy another DST, take cash, whatever you wanted to do at that point.
Okay. And then because people are investing in real estate, is it similar to the rental income? So people get rental income every month, and then when the property sells, whatever the value is based on the appreciation is divided between the owners based on ownership and time frames?
Exactly. So the income that comes in to the property flows through each month and then goes to the investors as a distribution, obviously every month, just like the rent. And then, yes, when the property sells, any appreciation flows through to the investors as well. And from a tax perspective, you still get all the benefits that you had when you directly owned real estate yourself. Everything still flows through to you as the individual investor. So you still get all the benefits of owning real estate, just none of the headaches.
Okay. Well, that's great. And I know a lot of people do want to deal with passive income more than management, especially if
Yeah.
they're close to the retirement age. Anything else that we should know about the trust that we haven't covered?
Uh, yeah, there's a few things. I mean, the trusts are,
Mhm.
like I said, already operating, already own the real estate. So there is no real concern about you not being able to complete your 1031 exchange. Like due diligence is going to go south at, day 90, or something like that. And there's actually reserves built into the DST to take care of capital expenses and things like that. So you don't have to worry about capital calls or anything in the future if something were to go wrong with the property, which is a nice benefit of being in the DST structure versus other structures. And yeah, I think that's it. Really, it's As long as you're okay with an institutional manager managing the property for you and you really want that passive income, it's a great solution for the right investor.
Okay. Now, another question for you. So let's say that someone is coming in and they still have a mortgage on the property that they're selling. And so they need to invest, but there's not enough cash, so they have to make up the difference. Can they still take a loan, or this has to be an all cash investment?
That's a great question. Sorry, we didn't even cover that. So DSTs have varying debt on them from about 0% to, let's say, 75 or 80, depending on what's available at that time. And with that, that debt is allocated to the investor based on the equity they put in, and it's non-recourse to them, to the investor, and it's already in place. So if they needed 50% loan to value, we would work together to find DSTs that met the requirements over 50% loan to value, and that would be done for them. Again, turnkey solution. It's already done.
Okay. Well, that is a lot of great information. If this is something that you are interested in, please let us know. I'd love to connect you with Ken. He's an expert in the subject, so he can answer any questions that you have. And again, if you're thinking of buying or selling in Seattle area, please reach out to me. I'd love to help you. And thank you, Ken, for joining us today.
Thank you, Vera. And yes, if anybody has any questions, happy to help.
Thank you so much.
Thank you.
Goodbye.